And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down stock market news, commodities, economic news, corporate news, including earnings like we're going to do today and a lot this week and next week as well. And any charts that are grabbing our attention as we're running our daily routine so that you guys can be better informed about what we're seeing out there across the marketplace. Today's show, we've got Mark back here for Thursday. I guess, Mark, is going to be your regular rotating day, coming back in here into the halftime report. Welcome as always. We got Matt running lead analysis and running the screen here as well. We're going to do some charting breakdowns. Cody on the back end producing, and I am your host, Coach Tim Justice. Earnings roundup a little bit later, but let's start with the broad markets here. Matt, first off, how you doing today, sir?
Tim, doing good. Excited to be here with the crew to break down the markets today. Kind of a light news day. We're regurgitating a lot of stimulus talk out there in the market. We have some earnings to cover, but overall, just a kind of a light news day a little bit.
I think it's a pretty chart. I honestly don't have, I like it. I mean, 4 green candles, 3 red candles back into the 90 EMA, Matt. You had the breakout. Now you're getting a little bit of a, corrective retracement here, obviously. How are you interpreting the chart here from just the basic price action perspective?
Honestly, it's kind of like we said yesterday, the bullish retracement technical setup is kind of starting to form a little bit. And now it's kind of in that wait and see approach over the next 1 to 2, 3 days to see how this market behaves at the support levels. Remember, when you're dealing with bullish retracements, you have multiple levels of support.
Mm-hmm.
Excuse me for that.
No problem. Get a glass of water there, bro.
Make sure you're living first.
I am living. How'd I get some tea in me? But when you're looking at this as a bullish retracement, and that is what I am looking at this right now as a bullish retracement. And in a bullish retracement, you have that 3, 4, 5 days to the downside where you have multiple different tests of key levels of support. The first level of support that you kind of come into in that bullish retracement, especially in the momentum environment, is the 9 EMA. And so right now you're looking at the 9 EMA right here. That's the pink line. That's the momentum based moving average. And as you can see, as the market has sold off over the last 3 days, where's it finally finding that support level? It's finding that support level initially at that 9 EMA. Now, in terms of that 9 EMA, it's just a test. You don't want to rush out there and just, it's kind of like I said yesterday, Tim, you're looking at the market right now and you're looking at retriggering. Okay, but you're waiting for that confirmation. You're waiting for the gun to line up on the sides. You're waiting for that confirmation. And so from a confirmation perspective, you're not going to see that until we see that upward movement in price that actually technically breaks out of the high of the day. So confirmation here from an overall daily perspective would be that the high of today's candle, that's at 34.86. That's a little bit of that momentum coming back into the market. Now, whether we get that or not, obviously we have another 3.5 hours left in the trading day. But initially, when you're looking at that support bounce, you want to break this down on a 30-minute chart, a 15-minute chart, an hourly chart, some type of intraday chart. My favorite is that 30-minute chart, but you can see it a little bit more clearly on the 15-minute chart as well. The 9 EMA coming back out to the daily chart here. The 9 EMA is right there in that 34.40, 34.45 level. Breaking that down from an intraday perspective back on the 30-minute chart, that's right into this range right here. And so as the market over the course of the last 3 days is coming down, 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 you're looking at certain levels on the intraday chart to kind of give you the indication that that selling pressure is now, subsiding to a certain extent. Buyers are coming back in at the lower levels in price. And what you see is you typically see some type of slowing momentum in that intraday trend. You might see that double bottom, double top scenario. And that's kind of what you're seeing initially right now as the daily chart is coming down into the 9 EMA, that 9 EMA right into this ballpark right here. Mm-hmm. As the market on the overnight action is selling off, where does it find support? Right there on that daily 9 EMA. You get that slowing momentum. Now let's see if we can start to see some higher highs, higher lows. When you break this down on a 15-minute chart, you can see that double bottom a little bit closer here. double bottom there at 34.35, kiss it again at 34.35, double top resistance right there at about 34.50, and then the breakout. So you're seeing it a little bit more clearly defined, and now you're trying to fight for some degree of momentum back up to the top side. And what gets me a little excited about this 9 EMA bounce here is you are seeing it technically behave the way you want to see it technically behave at that 9 EMA. You're seeing the double bottom on the intraday perspective. You're fighting for those bulls to get back from a momentum perspective, and now we got to see if we can establish some higher lows to get that movement, rocking to the top side. But you're seeing what you want initially. Now we got to see if there's any type of follow-up. Now, specifically on that 9 EMA, on that daily bounce, coming back out to the broader perspective here, you see that candle, the wick is that double bottom, fighting for it to get back up. You still got a lot of ways to go before you can actually call this confirmation, but you are seeing a little bit of slowing momentum from an intraday perspective. I still believe we have some downward pressure here. Just because you have a little bit of slowing momentum on the daily chart doesn't mean confirmation. Let's wait to see the market fight, but you're seeing what you want initially. I still believe 3,400 could be tested here ultimately in this bullish retracement, and quite frankly, anything between that 3,450 and that 3,400 level would be considered a bullish retracement. It's a different scenario if you break 3,400, and especially if you get back underneath the 50 and the 20-day moving average. At that point, you're looking at a little bit of more neutrality. Until that happens, you're looking at this as a bullish retracement, and you're getting prepared for those bullish retracements, those snapback patterns. You're getting prepared for the flag-based patterns. You're getting prepared for the high bases that may break out coming into early next week.
I love the technical breakdown. Very, very wonderful there, Matt. I appreciate that quite a bit. I'm sure a lot of people out there learned a little bit about price action, because as you're going from time frame to time frame, it really explains the nature of what is happening here. And these are exactly the levels I'm watching. I'm watching this 9 EMA to see if it holds, the double bottom on the intraday and all that kind of stuff, Matt, for sure.
All technical analysis it tells us the story.
Mm-hmm.
It tells us this broad-based story of the psychology between the buyers and the sellers, the bulls and the bears, supply and demand, however you want to categorize that. And even though a trend isn't in, like, when you're looking at the entire market from a broad perspective, that's an entire novel. When you're looking at a single candle, you're looking at just a single, storyline within the overall trend. And then when you're looking at that single candle, you can really break down the detail of that candle when you see the price action. But that's all you're doing is and when you're looking at technical analysis, is you're really reading the story of the buyers and the sellers and their philosophical nature about how they're approaching the market. And right now, sellers had control for the first 3 days. Buyers are coming back in, and buyers are starting to push back a little bit. The double bottom, the double top, the breakout, that's what you want to see from an intraday perspective. Now we got to see if the daily chart can follow through with that.
Some of the headlines that the market has been attributing as to why it's in this 3-day pullback have been around stimulus and COVID and some other things. Whatever. I do want to get to that. It might have just got a little overstretched and needed to cool off here, Matt. The S&P ran 4% on Monday. So
yeah. It's ran from 3,200 to 3,550 in the last 3 weeks. It's range up. It's range up. And when you're range up in the market, outside of some of the euphoria conditions we've seen in recent history, your range up, the market finds a reason to lock in some profit. We retest support, we re-trigger, and we just do that. We just, cut and paste. That's what we do. So I don't see this as abnormal market behavior. I actually see this as very normal market behavior.
Yeah.
You want to know what abnormal market behavior? This is abnormal market behavior.
Straight up in a line.
That is abnormal market behavior. This is a market functioning properly, in my opinion.
No, I like it. Like I said, I think it's pretty. I do like the 3-day red candle pullback into the 9 EMA. We'll see if it holds that 3,400 level in play for sure. Let's talk about some of the major headlines, though, and get you guys' analysis on this. There was a few data points out of COVID, Matt. I think we need to update the team on and at least kind of stay informed on it. I saw that like 22 states recorded more than 1,000 new daily cases, some of them record daily cases for those states. We had curfew imposed in France late on Wednesday. And in London, it looks like they're going to restrict social gatherings starting on the weekend. What is your interpretation of what's happening with COVID right now? Is there a market risk as well?
Well, and the reason I do want to talk about this today is because the market, for seemingly, I don't know, Mark, how long do you think the market hasn't really cared about the daily numbers in COVID cases?
3-4 months.
3-4 months, right? I mean, when was it, guys? We were going to the John Hopkins every day, and it wasn't just us, it was like everybody in the world going to the John Hopkins website, pulling up daily cases around the world, looking at that from a heat map. That seems like a lifetime ago at this point in the COVID economy. But it's I think it was like May, I want to say May, ever since we started embracing from a market philosophical viewpoint, economy reopening up themes, pandemic play themes, those types of themes that played out over the last 6 to 7 months. But you're now starting to see little by little the market start to care about this data a little bit more. Whereas all of it was stimulus, all of it was economy reopening up, all of it was, a discussion on V-shaped, U-shaped, W-shaped economic recoveries, all of it was, on the fiscal versus monetary policy stimulus. What is the Fed going to do? There was so much more, and especially in the political season, there was so much more on a daily basis that, people in the market or people in society cared about, that the market just stopped really thinking about the daily numbers, right? And the market started working towards the belief that, even if, we see Italy shut down a little bit, or Germany, increase their restrictions, or, London, discussing a national lockdown, or American states seeing, increasing cases, those headlines were not market movers to a certain extent. And I don't believe they're market movers yet, but I have noticed, and I have felt like these numbers on a daily basis, as it's getting more into mainstream media, as when it was just 3 or 4 states seeing, increases in cases, it was more pockets. We're talking 22 states at this point. 22 states are reporting more than 1,000 cases a day. 22 states are reporting record numbers in case loss. Just today, you got the quadruple whammy of London, France, Germany, and Italy all increasing, restrictions to a certain extent, given that they have seen cases expand quite aggressively in certain metropolitan areas in those countries. And so it is starting to creep into the social conscious a little bit of the market. And so, yeah, I do think that we need to be aware of how the market is starting to behave around this. You're seeing a little bit of COVID, economic type conversations around the market. I haven't seen it really come into guidance. I mean, Fastly, and we'll talk about Fastly later on today, they saw a decrease in guidance, and they didn't cite COVID. They cited geopolitical uncertainty. And so it's starting to creep out there a little bit. It's something we should, have our finger on the trigger there a little bit. So I just think we should be aware of it more, but I still don't believe it has a major market movement yet.
Yeah. Mark, what's your read on the whole thing? I mean, are you in the same place with Mark, that it's not really impacting the markets yet, but you're aware of the data? What's your read on the whole thing?
I mean, until COVID goes away, and when I say go away, it may never go away, right? But until there is
a workable vaccine,
that is used by the majority of the public, COVID is going to be a lingering thing. Now, it is going to be more of a lingering thing for certain stocks than the market itself, because we've got a lot of data over the last 6 months. The Apples, the tech stocks, all of those will do just fine. The Home Depots, the Targets, the Walmarts, they'll do just fine, especially if they're stimulus, right? FedExes, the UPSs of the world. So there are certain areas of the market that, regardless of what happens with COVID, whether it is a return to normal or a new normal, we have a lot of data on those stocks and how they'll perform in a COVID environment, especially if they're stimulus. And so certain stocks, whether COVID continues for the 2 years or 2 days, they're kind of independent. Now, obviously, restaurants and movie theaters and airlines and cruise ships and, those epicenter stocks, COVID news is going to tremendously impact them, in particular, lockdowns and so forth. So really, we have two markets when it comes to COVID. We have the epicenter stocks the need people stocks, and then we have everyone else, and everyone else is kind of COVID independent at this point. They're more stimulus dependent than COVID news dependent.
Nice little candle on the intraday, Matt. I saw that. Yeah, coming down to this other time frame, a little bit of a bounce as we're talking here in the halftime show. What are you seeing there?
I'm just seeing the market, like we talked about earlier just a second ago. The market's fighting for that reversal pattern, and the buyers are trying to find it, see if they can find some momentum here today. And the market over the course of the last few minutes is trying to find support right there in that 3450, and it's trying to confirm that reversal pattern. And if it does, if you get above 3460, you should see a test of that 3470 by 3480 zone, most likely in that 3475. So I think we're going to have some battles here today on the intraday perspective. It's going to be fascinating to watch. It's not going to make a lot of difference on the daily candle unless you actually do confirm. But over the course of those day traders, those day traders looking at that 3460 breakout, and they're getting ready to buy.
They're watching this real close right now for sure.
They're not 3460, but those day traders are looking at 3460 right now, and they're saying, "Hey, 3460 gets bought. We're gonna drive this up to 3475."
Yeah. Outside of COVID, I did want to get an update on stimulus conversations. There were several. I saw comments back and forth between Pelosi, Mnuchin, and Mitch McConnell as well. Maddie, what's your actually, Mark? Give me the news on COVID, or not COVID, but stimulus itself.
All right, over the last 20
right now, and then I'll get Matt's analysis.
Over the last 24 hours, here's the news tidbits. Mnuchin yesterday in a conference said that getting something done on stimulus before the election would be difficult. In Fox News interview, Trump says, "Hey, I want to do more than 1.8 trillion," basically signaling the same things he signaled for about a week now, right? And as he was giving that interview, McConnell said, "No, we're holding at 500 billion, which was the number they put out a few weeks ago that they would be willing to go." So here we are 19 days before the election. That's the daily rhetoric. It's just different versions of the same rhetoric, though. I don't have anything from Pelosi in the last 12 hours. I'm sure she said that she's optimistic.
She didn't say she was optimistic in that interview with Wolf on CNN the other day.
No,
she didn't say she was optimistic there.
That
was some Democrat on Democrat crime there.
Haven't we all collectively agreed that this isn't going to happen right now, and it's going to happen?
I think the market has accepted that, Tim. I do, and obviously it's going to be in the news headlines because they got to have something to write about. But even Mnuchin last night was like, "I don't see this happening." Now I'm paraphrasing, but I don't see this happening before the election. Pelosi, I don't see this happening before the election. I think we're going to talk a lot about it, but I think the market specifically, I think it's more of a political talking point than it is a market talking point at this point. I think the market has moved on to, hey, we're going to get some stimulus. It's going to be at some point post-election.
Yeah, I agree with that. In terms of other broad themes that I do want to talk about here today,
I just want to very quickly remind the market that simply because you get post-election doesn't mean stimulus is going to be easier post-election than it was pre-election.
No, they may not get the deal done then either. So,
and Pelosi, you might not get that 2.2 trillion unless you have Senate leadership. Yeah. So there's a lot to happen in the next 3 weeks, guys.
Yeah, I agree.
Pelosi's gambling with America, and I'm not sure I like it.
Well, I think all these guys, if they were really, not focused on the election and politics, they would just sit down and get a deal done. So I'm with you on that.
If there was not an election in 3 weeks, a deal would have been done already.
I agree with that.
And that is what is sad about American politics. Well, not American politics. That's politics 101. But politicians do this. They put their own needs in front of the American needs, and every politician who does that should be called out for it.
I agree. And, even more, and I know the jobs numbers don't really move the markets these days. It's not grabbing a lot of people's attention.
Okay. No. It's in every headline though, Tim.
Yeah, it is.
And in fact, the headline on CNBC I saw today, The initial claims is a very important leading economic indicator and I'm just laughing. I'm just laughing. And Tim, when did I say, how many weeks ago did I say this was a useless indicator?
Oh, I think it was months ago, not weeks ago. I
Was
think
it
we're
a couple
talking,
months ago
it was
now?
like in July.
A
Yeah, when
couple
we
months
start.
ago?
Yeah, it's been a few
Okay.
months.
Okay. This is when the report came out. Right here. And it was a negative report, correct?
Mm-hmm. Mm-hmm.
Okay. And it showed the labor market was getting worse, correct?
Mm-hmm. Yeah.
And the headline news was additional stimulus is now needed, correct?
Yeah.
Here's the market. The
Market's
market
up on
doesn't
it.
care about it.
Yeah.
The market doesn't care about that data point. Why? Because that data point doesn't tell us actually anything about the real nature of the labor market any longer. You cannot manipulate economic data to fit political needs and then have the market actually care about it.
Mm-hmm.
Market doesn't care about it. I don't care about it.
Well, and for anybody out there, especially coming into the halftime report every day, you already know the way that we analyze content in terms of economic data, look at the chart and actually get the reaction. What Matt just did there, I think is very important. It's a good lesson for you if you're new out there. Don't just trust a headline. Go and look and see what the market response was. Matt, right there, 8:30 p.m. Eastern, the market found support on a terrible headline, that would feed an algo, almost 900,000 people filing for unemployment claims. But essentially, the market has got no point. And Matt, you've been analyzing this for a while. They just don't care about the jobs data right now. It is dire data, if you just took it on face value, but they don't really care about it.
No, it's going to be used more for political purposes than it will for any degree of economic or market functionality. I mean, the simple reality, stop me if you've heard this before, the market performs differently at a support level versus a resistance level on the exact same headline. That same news headline, if the market's at a high hitting resistance, it would have sold off. The market sitting at a support level, it buys into it. The simple reality, when the market starts pricing in things like that, is because the market truly doesn't care about the data.
Yeah, I agree.
I mean, because the data doesn't matter anymore. I mean, because we have seen that in record high unemployment, as long as there's stimulus, I mean, it matters to the individual a lot, right? But we've seen from a macro point, as long as the stimulus, personal income goes up. And so if we get a big, huge stimulus package, lots of people kind of been unemployed and there's still more money in the system.
Mm-hmm. There was one more economic.
The simple reality, guys, is economic reports are leading indicators. They lead the marketplace, but it's only a certain degree of economic indicators. When an economic indicator gets to the point where it is treated simply as a catalyst, it's because the actual data behind the economic report is no longer viable to actually give a true economic projection on that. So now the economic indicator, i.e. the initial claims, which was an economic indicator and a leading economic indicator that allowed us to truly understand what was happening in the labor market, it is no longer seen as that any longer because of the manipulation in the data. It is now just seen as a catalyst, which means now it's a lacking indicator. And because of that, it doesn't truly have a market function, in my opinion, other than knowing when the data comes out, knowing where the market is in relationship to support and resistance, and how that market and how the market will use the data as a catalyst to do what they wanted to do in the first place, which is buy a support or sell at resistance.
Mm-hmm. Mm-hmm. The other economic data point today, Matt, is it a leading indicator for you still? I mean, the Philly Fed manufacturing number, when you see those kind of numbers come through, or do you have the same take as you do unemployment?
No, I do not have the same take on the manufacturing data. You had the Philadelphia Fed Manufacturing Index come out here today. You also had some other manufacturing indexes. The only thing I'll say about the manufacturing indexes, one was good, one was bad today. It's COVID, guys. It is very, very difficult to get an actual read on the manufacturing data, and it's going to be regional based. And so a lot of times when we see manufacturing data in certain locations like Chicago, Philadelphia, or the New York index, a lot of that is regional based. And so you're going to have a lot of you're going to have a lot of volatility in those reports on a month-to-month basis. One was positive, one was negative. I don't think you can get an economic read on either one today.
Yeah.
But it's only because it's more regional based, and some regions do better than others, especially in COVID type scenarios.
Yeah, yeah, and it makes sense that New York would be a little bit struggling there, obviously. Mark, you did have a note on tech that we wanted to bring up. Give me the NASDAQ before we move into, broad market analysis from like commodities and currency perspective. Let's talk tech for just a second. Mark, you had something Goldman Sachs said about tech. I didn't see the headline on this one or read the report on it. What was it that you want to bring up here on tech?
They essentially downgraded the entire sector from buy to neutral, basically saying moving forward, there's a barrage of policy and economic shifts that will temporarily basically make it a market perform, right? Tech's enjoyed a huge run. They don't say that this is going to last forever. They just say it's a short thing. And you've seen this in the sentiment. And I've seen so many statements from Wall Street people and CNBC over the last 2 months, basically poo-pooing tech, basically saying, listen, it's not that it's bad, not that you should sell, not you should short, but just to not expect the outperformance of the market. And Goldman Sachs weighing in with that camp today, basically saying tech market perform from this point.
Mm-hmm. I don't know. I mean, I don't agree. Number one, I think the tech sector is looking beautiful here right now from a chart perspective, technical perspective, and just from a leadership perspective. I mean, if people want to pile into something, don't you think they're going to want to pile into the Apple, the Amazons, the Microsofts, that kind of stuff, Mark, especially around retail season? We just had an Apple iPhone event. We got all these, charts that have been developing in a positive way. Do you agree with Goldman on this? I know you've kind of got that, slant on that side of it. I'll get your take as well, Matt.
Well, I mean, tech's extremely overvalued across the board. Now that hasn't stopped it, right, from moving up. But and it's not that I'm going to shy away from tech plays when I sell a naked put on something I see a bargain on. But I'm not going to sentiment is really, really huge to me. And I just don't feel the sizzle. I mean, I'm still going to take opportunities. I'm still going to use the chart. But I'm not going to be like, oh my goodness, I'm going to have 40% of my account in tech. Like sometimes is the smart play. I don't know if it's the smart play right now.
Yeah. I'm on the other side of it. Matt, what about you?
It depends on why is Goldman Sachs downgrading the entire sector? What's the logic behind it?
Part of it valuation, part of it policy, part of it general economic. You've had this desire in Wall Street, in my opinion, to get into other areas of the market, basically, in order for the whole market to lift up. They point to like industrials. I've seen a few reports on CAT this week and other big industrial companies and have other areas of the market do some of the overperformance heavy lifting. That desire's been there from for a while. I first noticed it on Fast Money when Steve Grasso about 6 weeks ago, who's a bull on everything. It's like, I'm selling all my tech stocks, I'm doing other stuff. And I've seen so many comments like that. Just hey, tech's been a good run for 6 months. It's been a great run, right? It's been an amazing run. They're looking. None of it is I hate tech. It is just this desire to find the next outperforming area of the market for the next 3 to 6 months.
Mm-hmm.
Well, I mean, when I look at technology, I'm going to bet on technology every year until I'm dead. And some years it's going to be amazing, other years it's not. But I'm willing to bet 90% of the time it's going to be good. But when you're looking at technology in the current market environment, technology right now, out of the 11 sectors in the S&P 500, the technology sector is the 8th most overvalued sector. It's not the number 1 most overvalued sector. Consumer cyclical is actually the number 1 most overvalued sector. Real estate is the 2nd most overvalued sector. Communication services is the 3rd most overvalued sector. And then you have technology. And so if you're looking at it from a fundamental perspective, the current Shiller PE ratio on technology is currently at 42.1. The regular PE ratio is at, I believe, 34.7 at this point. In any traditional metric of overvalued, area of the market, this obviously would fit that nature of this being an overvalued area of the market. But But at the same time, what I will say, and let's take it out to a little bit of a longer time frame here, when you're looking at the PE ratio collectively against time frame here, technology is right now at its highest level in this market cycle, but it's right there in the same zone as you were before the trade war in 2018, right there at the 40 handle in 2018. You're at 42 right now. Technology has been overvalued literally now for about 6 straight years, I would say, from a share valuation perspective. And so when we're looking at the overvalued nature of the market, technology has been overvalued since right here. And yet technology is up a whopping 250% ever since that time frame. So what I would tell Goldman, and what I would tell every other trader out there, is yes, when you're looking at the fundamental nature of this marketplace, that the fundamental nature of this market has been broken not since COVID, guys. The fundamental nature of this market has been broken literally for the last 4 or 5 years. Instead of seeing a normal market cycle where we reset the debt clock and the debt ceiling and everything we do from a debt perspective, we stimulated the market. We stimulated the market in 17. We tried to stimulate the market in 18. We had the Fed continually stimulate the market in 19 and 20. And so from a traditional fundamental perspective, nothing makes sense in any capacity in the last 4 to 5 years. And if you were so concerned about the fundamental nature of the market, you missed out on a massive, massive price movement, because what has taken over? What has taken over is modern monetary theory, and how modern monetary theory and the increasing in liquidity can offset anything from a negative perspective. So at one point, is the market going to see a significant crash? Yeah, we saw it in COVID. You saw a 38% decline, right? That's what you saw. And then you saw the market break out and run again. I look at the NASDAQ right now and I see from a fundamental perspective, it is overvalued. Absolutely 100%, no doubt about that. I agree 100% with the overvalued nature of the market. And if you're looking at it from a fundamental perspective, a downgrade is certainly warranted. But that downgrade has been warranted for 6 straight years. And in that 6 straight years, guys, you had a major ongoing trade war with the 2 largest players in the world, in China and the United States. What's going on in that 6 years? You had an unprecedented election cycle. What's going on in that 6 years? You have now a COVID pandemic economic situation that is truly unprecedented in all of our lifetimes, and none of us, no government, no state, no municipality, no corporation, no individual was prepared for. And yet in the face of all of that, what did, Mumu, can you please shut my door immediately? What did the market do? It did nothing but go up, 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 up some more. Why? Because the market has shifted its focus from fundamental analysis to more from a modern monetary theory perspective of how zero interest rate policies, negative interest rate policies, quantitative easing, repo actions, stimulus packages, $3 trillion of debt this year, averaging over $1 trillion of debt every year for the last 3 years. So the market has moved on to this, what can you give me, instead of building something fundamentally beautiful for the market in general, what can you give me today? The market is a spoiled little brat. It's a child who is 12 years old who simply wants their candy bar right now and doesn't want to work for it. And they don't care about building the fundamental nature of the market. They care about how much free money the government or the central bank is going to give them, and how much that liquidity is going to drive up price action.
Yeah, I mean, I get it from a fundamental perspective, citing valuation, citing concerns, all that kind of stuff. It's notable. And obviously, there are other sectors that we can focus on. I'm just on the other side of it. I still think tech can absolutely lead here, especially on the backdrop of this idea behind stimulus, the Christmas rally as well, the old Santa Claus rally. And technically, Mark, I mean, you got a 3-day pullback coming into the 9. You mentioned no sizzle. I will just push back on that one item. We were up 4.5%, 5% on Monday alone. I mean, that's a lot of sizzle in my opinion. I think maybe we
You're
just
up on the week.
Yeah. Yeah. I don't know. I mean, I get it. I get it. Maybe
Listen,
just Goldman's
the
coming at
Bears,
a different
the
angle.
Bears are going to come out and crow any down day in the market, and it's understandable given the fact that the Bears have had to deal with this for the last 10 years.
Yeah. Yeah. Yeah.
Listen, I got the NASDAQ as a bullish retracement on the weekly chart, fighting to break out of another resistance level and just showing a little bit of weakness at resistance.
Well, and it could pull back more, obviously. I mean, if the market doesn't hold, you got a
Listen,
couple. That's not
okay,
what I'm
that's fine.
saying, right? Yeah.
No, of course not. But again, fundamentally, this market's broken.
Mm-hmm.
And guys, it was broken before COVID fundamentally. What are we talking about? Seriously, we were dealing with the most overvalued nature of the market literally back in 2015, then in 2017, then in 2019, now in 2020. The fundamentalists are going to be right at one point. But how many times do fundamentalists get it wrong before they get it right?
Mm-hmm. Yeah. No, that's exactly right. That's exactly right. Well, I mean, as I'm looking across,
I will tell you this,
but,
Tim.
mm-hmm.
I'm not rushing out to buy an insurance on a portfolio because of a bullish retracement in
I
the
wouldn't
stock
even
market.
hedge here. No,
I wouldn't even hedge here.
Yeah, me neither. I get it.
Now, very quickly.
Sure.
If the market comes back under 3,400, are we shifting our bias a little bit? Yes, but until that occurs, not going to happen.
But there's got to be a lot of fight in this market back
and
forth.
The buyers are literally fighting this very second to break out of a reversal pattern. That's what's the fight is happening.
Well, and I love the fight back and forth. I mean, as it was pushing that 3,400, there for a couple of weeks, Matt, you were breaking down the intraday analysis, the way that we were finding support and the pivots and all that kind of stuff. Obviously, those kind of technical battles, they're going to drive my short-term price action, the way that I approach markets. And right now, I'm looking at a retracement kind of into some interesting levels that could hold. But we'll watch these price levels. In fact, we're pushing this 3,460 right now.
And this retracement might confirm, get us all shaken out, and that's perfectly fine. And it won't stop me from trading the next retracement or the next retracement or the next retracement or the next retracement. And I can go on and on and on.
Mark, you want tech to come down so you can sell naked puts and not feel bad about yourself, right? Is that where your head is? You want a deeper retracement because you want to play it, or are you avoiding this in general? I mean, I don't want to put words in your mouth there, but
I'll never avoid tech because because everything Matt just said is true. Like, what am I going to do? Wait till tech is at the perfect PE ratio in order to get exposure? Well, since I might die before that happens, I'm never going to avoid tech altogether. It's more of a, for me, it's like sometimes when we have trades out, it's like we got 6 or 7 trades. I mean, too often, and this is a mistake. This has nothing to do with what Goldman says. It's just a reminder, if you have a trade on Apple and Microsoft and Twitter and Facebook and AMD, you're really exposed to one area of the market. And so, just be prudent. And that's good advice, no matter what Goldman says or doesn't say, whether they say go buy tech or go sell tech. Having your trades be balanced in different areas of the market can make a big difference.
Yeah, portfolio design, allocation, not going completely one place or the other. I agree with that. We've been talking about that, by the way. So many of the good industrial plays coming up. Matt, you've been all over utilities when it broke out last week and all that kind of stuff. So I do think there's a lot of opportunities across markets, obviously. And I'm with you, Mark. I'm not going to avoid tech either. Let's flash through commodities here, boys. If we can. Crude oil, I see nothing. Literally nothing that I need to talk about here today. Mark, any updates on fundamentals or anything you've seen in crude?
Thank
you.
Yeah.
Say a lot. Hey, man.
That's all you needed right there. That is all you need. Mark, can you say anything about the fundamentals of crude? Yep, that was great analysis. Better than anything I've seen on CNBC.
That's as good.
That's as good as it gets right there.
It's oil, man. Just get used to that song and dance for the next 6 months.
Yeah.
Listen, if you want to know the internal debate people have writing headlines about this market, you just saw it there with Mark.
Yep, I agree.
What's going on with oil? Saudi Arabia, done.
I think oil is absolutely a fade the extreme. When things rally, you get bearish. When things sell off, you get bullish. If you know how to trade consolidation patterns, you're going to love oil for the next 6 months.
Take this candle. Just take this candle and then just assume that's oil in general. Big down, up, down, up. It doesn't know what it wants to do. There's no probability here. You know, I love the question you've asked two amazing technicians. I mean, two of the finest technicians I know, and Noah Davidson and Tyler, the last 2 days in the halftime report. And both days it's like, hey, give me a read on oil. And both of them are like, the same thing Mark just did. I mean, that should tell you everything you need to know about the oil market right now. This is a tradable instrument that as of right now is completely untradeable in terms of directional. Obviously, cash flow traders are going to, you know, sell a 3 delta put option, be like, yeah, I'm taking an aggressive stance, taking a 97% probability trade. I look at when I'm analyzing in the halftime report, I'm analyzing it from a directional perspective. That's my job from a technical perspective. But no, there's nothing to see here from Delta.
And like you said, maybe a little day trade there if you're a day trader of crude. But
crude's been a great day trading vehicle that, you know, in the recent history. But unless you're day trading it, there's nothing to see here.
Yep. Gold next
deep out of the money options, and like when I mean deep, I mean like very, very deep out of the money options and day trading. But outside of that, there's too many better vehicles out there.
I agree. Quick peek at gold. Nothing really to update there, Matt. Doji literally at 1900. Same analysis we've had all week. Anything else on that one? Yep.
Nothing. I mean, just patience on gold. There will be a shiny buying opportunity coming in the very near future, but that is not today.
Yeah, not today. But the dollar is having an interesting development here today, just from trying to find a pivot point. Little green candle here, rallying back up. It looked
How
like
long are you going to talk about the dollar?
Less than 1 minute. And if you get up and leave, I'm going to actually pitch it to you.
We've caught your little trick.
Yeah, I know, and I'm not even hiding them anymore. I'm like, how long is this going to last?
Listen, when you were on the halftime report 5 days a week, listen, we let you get away with it. But now you're only on Monday and Thursdays for the most part. You're not getting away with that.
Man still got to eat.
Dude, the man has 22 and a half hours.
Man still got to eat.
That's true. The man does want to eat.
Dude, if you need a snack, you can get a snack.
If you start eating a Hot Pocket live, then yes.
Snack time.
No, it has to be a Hot Pocket, though.
I don't have any Hot Pocket. That sounds delicious. Actually.
Okay, I need you to, and it's got to be a traditional ham and cheese Hot Pocket. It can't be any of the more creative versions.
That's perfect. Yeah, I mean the ham and cheese.
And you can't be dipping it in anything. You just got to have like a paper towel around it because it's hot, right?
And of course, rather than letting it cool off, we always take that first bite, burn the roof of our mouth, and then just.
So you young kids do that. We got tricks as old people to how to get away with that. So.
Yeah, it's called blowing.
I actually like cutting you bite the corners off both ends, and then you blow through it to cool it down.
You're way too creative, Cody.
I can't stop thinking of Jim Gaffigan now. Whenever I hear Hot Pocket, I think of his comedy stand-up skit on the topic. It's just hilarious.
And whatever you just heard was better than whatever I was going to say on the technical analysis on the dollar. Honestly, Hot Pocket analysis right there. But the dollar's looking to me. Once you felt that breakdown at that 25-20 level, got underneath the 50-day moving average, it moved it into some degree of neutrality. And that's going to be some degree of neutrality for a while for me on the dollar.
Yep. Let's talk individual companies here. Actually, some interesting notes across corporate earnings and all that kind of stuff. Matt, you want to start with earnings or some of the other headlines today? The earnings ones we've been doing.
Let's finish. Let's just do a rapid fire in earnings. I'm not that interested in any of the earnings here today. I mean, there's some, but let's go through a couple of the companies. Let's do this rapid fire style though.
Sure. Let's start with Alcoa.
Oh, you wanted me to get Alcoa's earnings?
I just had no interest in it.
I literally said, let's do earnings last. And then
they sold some aluminum.
Oh, did you say do the?
Wait a second. They don't sell a lot of it.
They sold less than expected.
Hold on. We're not going to just allow what just happened just to go through. I tell Tim, let's do earnings at the end. Okay. I talked to Tim about how I'm not that interested in any of the earnings. And then Tim starts with earnings, and he starts with the most least interesting company that reported earnings here today. That's got to be called on the floor.
Sure.
I need to know why you assumed I actually got.
I heard rapid fire, and I thought we were just going to go through them real quick right now.
No, you
I heard
did
wrong.
your best old man where you didn't hear anything I just said, and you just went to your agenda.
Oh,
It
all
was
right.
written. Hold on. It was written down on your paper, wasn't it?
It's on my paper right
And
there
it's on your paper next,
in my
isn't it?
notes. That's exactly
You
right.
can't get off that. You can't.
I'm an old man.
Tim's like, we got to do earnings.
We
I
all get
wrote it
stuck in
down.
our
We have to do
processes.
earnings. I wrote it
I
down
did write it
because
down.
I wrote it down. No, I'm not doing earnings now.
I'm a process guy. All right, let's go to company news. Fastly,
First of
actually.
all, I did not get Alcoa's earnings, and neither am I going to go get Alcoa's earnings because I don't care about Alcoa's earnings.
Mark, do you have any interest in this company while we're
Dude,
on it?
Alcoa
Last
will
thought
be on
it.
my 100 list from now to the end of time.
You
You
like
should
it.
remove it like the Dow removed it years
Well,
ago.
listen,
bro.
when there is a better aluminum company, I will put it on there. But
You just want to have the aluminum
I like a
exposure.
diversity,
I see.
right? I like
I see.
diversity. So earnings revenue was down 7% year over year on Alcoa. Lost a lot of money. It wasn't pretty.
You should not have this company on your 100.
You know, listen.
You should not.
If
You're so
aluminum,
old.
you know, no, listen. You can find me a better aluminum company, I'll put it on.
I can. Do you still have a coal company on there too, Mark? I arch coal for you.
I do not have a coal company.
Well, you got to have a coal company, bro.
Listen, I've tried to find one I believe in. I can't. So,
But you
They don't
believe in
exist.
Alcoa?
I believe in Alcoa at $7. So
I see. You want to play the bottoms. All right. Let's go through some company news here. Actually, we'll come back to earnings. I'll even put it on my notes, Matt, and draw a little arrow here to remind myself. Fastly, actually, first, I do want to bring this one up because, Matt, you've been talking about guidance and all this kind of stuff that these companies have been doing. Fastly has been one of these companies in the consciousness of the uptrend, and bullish traders have been playing these kinds of momentum stocks. And Fastly came out before their earnings report, Matt, and actually decreased their guidance. Now, there's several things going on here, obviously, Matt. I want to get your take on this first. Number one, what was the actual guidance they gave from the reduced number? And then how are you reading this? Because the market response down 27%.
Number one, for everybody out there complaining about how Fastly is down over 25% when they only reduce their guidance by $2 million, I want to remind you there's a little game being played on guidance right now, and it works both sides. You can't raise your guidance by 5 cents and expect massive price appreciation and then decrease your guidance by just a small and expect nothing. It works both ways, especially for a company that is a massively high flyer priced to literal perfection. And when you don't come in perfection, and for the whiners out there on Twitter, this is not perfection. When you lower your guidance by 2 million against the 73 million, you're lowering your guidance by up to 3%. That is a big time reduction in guidance, in my opinion. And everything that happened on Fastly today is absolutely what should have transpired, given the fact that Fastly is extremely overvalued, given the fact that Fastly reduced their guidance in front of earnings. Now, people that have been around the market longer than 6 months, they understand that when a company does this, it's because they're trying to price in something else that's coming bad down the pike as well, i.e. earnings. This gives me a lot of caution. When a company comes out, lays out this negative information just a couple, 2-3 weeks in front of an earnings report when they could have easily done it on their earnings report, they're trying to price in the negative news before the actual event. That's what's happening here. Fastly's getting beat up, and it's absolutely 100% the way the market should behave. If you're going to run up like Fastly, get prepared to get beat up if it goes on the downside on some negative news. Even if your analysis is just, oh my, it's just $2 million. You're right. It's just $2 million against a PE ratio that is absolutely exploded against the backdrop of a company that's up over 700% in a very short time frame. You got to fly your price for the future. You didn't do that. You get beat up, and it came back down into neutrality. I got Fastly as neutral now, and it's a stay away. Nothing to see here. Don't care. There's too much resistance in front of it to fight through.
Did you see the commentary on ByteDance and TikTok from them?
I saw the
well?
excuses.
Yeah, it's like, I mean, come on,
I
guys.
saw the
Listen,
excuses.
if you're going to cite the reason why it's down today is because they brought up the ByteDance problem and TikTok, well, I mean, it was up 25% the previous week. Okay. I mean, we've only
Yeah.
given up the gains from like mid to late September on this 25%.
Well, and I know that deal's not done yet, but we haven't been talking about that deal for a while now.
Yeah.
Nobody in the market has. Fastly, you using the geopolitical situations as a scapegoat. We see your nonsense, Fastly.
Yeah.
We see what you're doing, Fastly. It's not going to get past the tackle trader team. We see that nonsense. We're analytical traders. We see that craziness. We see that nonsense. You're going to be called out for it. And again, I get it. It was only a 3% decrease in guidance. That is a big time news story for a high flying company that's priced to perfection.
Yeah, absolutely. And obviously the market's brought
You got to increase guidance here, Fastly. What are you talking about?
Yeah.
You decrease a penny, it's getting beat up. $2 million, you're getting slaughtered. You reduce a penny in this environment, you're getting beat up.
Marky,
Listen,
you there?
When are these companies going to learn? Just don't say anything, because this market, like companies that actually provide guidance that isn't stellar, they get killed. We got Cisco as an example, Micron recently, Fastly today. If you just say, hey, we don't know, COVID, we don't know, those companies aren't getting punished at all when they do that.
Mm-hmm.
Makes me think something else is happening in the earnings report.
Probably. Yeah, probably. And they do have earnings coming up here in about 3 weeks. So we'll take a peek at that when it happens. Next one here, Matt, I want to talk about here is Tesla. And did you see the tweet out of Elon last night? I know that
Elon's a child. Yes, I saw the tweet.
He is a child. There's no question about it. Pricing structure, Matt. They actually have a competitor from one of their ex-executives, Peter Rawlinson, who works with Lucid Motors. They're coming out with another car very similar to the Tesla. They want to be competition to them, and they priced their EV model at $69,900. And Elon says we're going to match that and actually go a little.
Don't even give him justice.
I'm not going to
Don't even give him justice on it.
Do it. Any interest in Tesla here? I mean, it had a little bit of a breakout running. Now we've kind of failed on that.
I got some interest in Tesla. Tesla's coming down with the market. I still got that as an ascending triangle with the potential breakout. Tried to confirm yesterday, snap back today. Let's see how the 9 handles. But I absolutely have interest in Tesla here.
Yeah. It's an interesting pattern. Yeah, there's no question. I think that if it holds up right here, it'll be on
an ascending triangle, cup and handle. It's not interesting. It's a breakout.
It's a good looking pattern. Yeah. All right. Let's keep working through here. A couple others that I had.
Target would be 500 on Tesla, by the way.
Mm-hmm. Let's go with Space next, SPCE. I did see that they got approval at some point later in the month. They're going to do their first test of an inner space travel here around the orbit, and they want to get
intergalactic. Man,
I was going to say big. Intergalactic. That would absolutely go big. But they also want to get Richard.
I would have bought out in the money calls on space if that was the news.
On intergalactic.
Yeah, I would too. They've already figured out wormholes and they're jumping galaxies. Yeah.
I would have immediately went to the trade tab, went to the longest time frame, and gave me the longest strike price.
Buy a 10 Delta.
Let's go.
Yeah.
Done.
Oh, as far out of the money as I can buy.
And honestly, if that's what the news, I'd be like, I don't even care about the bid-ask spread. Let's YOLO this.
Sure.
Let's YOLO out of the money call.
It's not a bad little technical setup, actually. By the way,
yeah,
it's a little bit
not
of
as good as intergalactic travel.
Obviously not. Looks like they're going to actually get out there and do something with the projections they've been talking about for years. They might be flying as early as next year. Matt, do you have any interest in this company from that perspective? I mean, here's a company that's been all for a long time. Now they're starting to do something. Any interest here?
I do have some interest, not necessarily as a swing trader. It's kind of choppy. It's not very clean that you like as a swing trader. You like clean entries. You like clean stop losses. Targets are targets. You can do whatever you need from a target perspective, 25, 26. But I don't see a clean entry and I don't see a clean stop loss. What I do see is a company that was range bound for a long time between 15, 16, and 20. Breaking out of that $20 and trying to fight for $20 with that rising 20-day moving average also catching up to it. Mm-hmm. And so I'm kind of interested here. with that defensive nature of $20. I think it's tough from a swing trade, but I'm a little bit interested as some position trade. But that interest is only interest. I'm not there yet.
What about you, Mark? Any interest in space?
Yeah, space. I have a rotating naked put that I sell above that floor. I never get put; it always expires. But it's a cheap stock to cash flow. It probably. I mean, space is one of those companies that, like, in 5 years, if it's range bound between 10 and 30, would it shock you? Like, it probably wouldn't shock me. That's a long thesis, right? It's a long thesis for this to play out, and it seems like they have a ton of funding. And liquidity is not an issue. So if I can pick up 100 shares low with a cost average down plan, I'd be willing to do that, but I'm probably not going to chase it.
Yeah. And it does have these weird little rallies and pops, Matt, which kind of leads to maybe more of a position style type idea or cash flow or something more creative like that than just the traditional swing trade. Because you notice it doesn't always trade very clean, but it can run. When it runs, it really does run.
And when you find me a better space company, I'll put it on instead of space. I like one of everything.
Tesla.
SpaceX. When SpaceX comes out, that will be one of the most popularly traded initial public.
You don't think people treat Tesla like it also includes SpaceX?
They kind of approach it as all.
They kind of approach that way.
Yeah, they just trade Elon. Let's call it like it is.
Yeah, you might as well just literally put the symbol ELON.
It would be very.
It's true.
Like you're buying shares of.
Can you imagine another company that would have a bigger share drop if their CEO left than Tesla?
Not in this world. No.
I can't. I mean, I don't even think there is something in the stratosphere as the number 2.
Bezos.
No.
Amazon's too established.
Amazon's a powerhouse.
Amazon's too established.
Are you kidding me? Bezos is like 6 months away from making the announcement that he's, just working on, other projects, just going to be going to go the Bill Gates route. Amazon would keep being a juggernaut.
Yeah, I agree. Speaking of a juggernaut this year, by the way, just on price performance, Zoom is the one I want to go to next year. Matt, they actually had a price target increase, I believe, from AB Bernstein. This one was a big one, guys, from 228 all the way to 611, basically citing increasing bullishness on operational metrics.
Bernstein must have been watching our options report.
They must have, and now the chart is actually developing in a very, very good way. Matt, first off, the price upgrade, you agree or disagree, and then break down that chart for me if you can.
What was the price target?
611 from 228.
Yeah, they're making up numbers, and I disagree with that. But I do agree with price appreciation here. I think the breakout of 500 was clean, and I think the price appreciation is clean here as well. I think you would have saw this whether you saw a price upgrade out of Bernstein or not today.
Yeah, and that chart development from the
I just gave the market a little bit more confidence.
Give them an excuse, and we're at the all-time high here. Obviously, I mean, when there's a path to where there's no resistance, you can catch a little trend for sure. Yep. All right. Now, DraftKings, last one here before we get into earnings, if we can. Mark, if you have any other ones, we can also do that at that point. DraftKings, actually, they announced that they struck a deal with Warner Media property, Turner Sports, where they don't get to actually broadcast through the NBA games on Turner Sports, but pretty much every other one of their sports that they put on that network. Another line of where these companies, and this company specifically, has been striking media deals for quite some time here, Mark, and obviously sports season is now underway in football and all of these kind of things. We've seen DraftKings on TV quite a bit pushing these deals. Stock's not performed well since they decided to issue new shares. Mark, number one, do you think the news can turn around for DraftKings when they start striking these deals, getting the announcements out there? And number two, how do you interpret that chart? Because that's ugly.
No, I mean, there was a violent reaction to the issuing of new shares. There just was. It happened on the day. I mean, because this was the second time they've done this year. That's a little greedy, and I think that their short-term price is being punished for it. Long-term thesis is still intact on DraftKings, right? If you believe in sports betting, if you believe states will have that as an additional source of revenue, that's pretty much chalk consensus in the analyst world. It all comes down to valuation, what you want to stick. Obviously, the short-term technicals are bloody, but as far as long-term valuation, it's just what price do you feel comfortable getting in if you're going to hold it for 5, 10, 15, 20 years. So You know, that's where I'm at with DraftKings right now.
You know, Matt, just from a chart perspective alone, obviously we know about the news that drove this thing below the trend that it was holding. Now that you're in pretty much a broken daily chart trend, what would you start to watch for in a chart like this?
You know, and my internet's a little unstable, so if I cut out,
I just got the same message, by the way. It could have just been something.
Yeah, so if I do get cut out, because I did hear you and Mark cutting in and out a little bit, so I apologize if that is happening. But, you know, I was interested in DraftKings even after they did the second stock release a week and a half ago, up until yesterday, quite frankly. And then when the market started selling off a little bit in the last 2 days, DraftKings sold off a little bit more aggressively, violated short-term support level. It was clinging on to this $50 handle, which is a significant whole number. It's also right in the zone of the old high base, you know, support zone right there as well. And now, as you can see, that first kind of test of that 9 EMA was yesterday as well on this downward move in price. And it didn't even show up for the fight, guys. I mean, it just ran away as fast as it could. And so, you know, you obviously got some downward pressure with the bears having control here. And you got to expect a little bit more downward movement in price. You do have the 50-day moving average right there at 45. That's going to play a little bit of a role as a support level. But as of right now, the momentum is to the downside. The 9 EMA is now putting a lot of pressure anytime DraftKings touches it. And so up until, you know, yesterday, I was looking at this as, hey, let's see if we can get confirmation. Let's see if we can get above the 9. Let's see if we can get above the 50, the 20. And at that point, you can start mapping out something to the top side, especially on this weekly chart. If you're looking at that on the weekly chart, seeing a little bit of slowing momentum, you could see that as a bullish retracement on the weekly chart. See that upward movement in price, break out of that 52 and watch it run again. Now you have time frames, all of them trying to push to the downside. I think you can expect a little bit more downward movement in price. Again, the 50 is going to absolutely play a role here, but it doesn't have a lot of rich history on the 50-day moving average, given the fact that DraftKings, you know, was an IPO in recent history. So not a lot of evidence at the 50. We think it's going to play a role, but it certainly could just blow right past that, like it did intraday support over the last day and a half. I think you're looking at $40 here, $40 by 35 in that range. Maybe the momentum stops there. Maybe you can look at it from, you know, a position or an investment at that point, something to pick up DraftKings after a fairly substantial drop in price. I mean, guys, 64 all the way down to 45. That's a big movement in a short time frame. And both in terms of dollars, in terms of percentage, those things can't be considered retracements. Those things at this point can't be considered, you know, by the dip mentality. You got to wait for a little bit of more, you know, traditional technical setup, a double bottom on the daily chart, a breakout, getting those time frames back aligned. But as of right now, I'm not looking at bull trades on DraftKings, which maybe, you know, Mark, you should buy an out of the money call option now.
Mark, are you in for the out of the money call? Go long delta there. I doubt it. I do know Mark,
sell your put.
He wants to pick.
Listen,
it up
I'm a stubborn SOB. Listen, when I
Wait,
come up with a long,
is that breaking news?
Yeah, like when I come up with a long-term valuation that I'm comfortable getting in, it really takes a lot to move. And the stock can go to $1 billion. I don't care. My valuation is my valuation. You know, I'm going to be very slow, very cautious. I'm going to give myself a huge margin of safety. I'm still targeting
30.
What's up with the Justice Boys coughing today?
COVID.
No, I don't think it's COVID. I think it's
no,
just
you know. So I'm still.
Oh, that's what my daughter told me earlier today.
That's what everybody always says every time.
I coughed one time today as I woke up and I was just clearing my throat, literally getting ready to brush my teeth. And my daughter's like, "Do you have COVID, Dad?" I'm like, "No, I don't have COVID."
If you're gonna blame someone for having COVID, you gotta say the Rona.
Oh, she does that too.
You got the Rona.
She does that too.
By the way, I've got.
I'm still targeting $30, Tim, for my first 100 shares.
In fact, this is what she said this morning after she asked me if I had COVID. I said, "No, honey, I don't have COVID," and she goes, "You're sus."
Sus. You're sus.
I'm already sick of sus.
Oh, it's gonna come and go real fast.
Yes, it's Cat. Yes.
Although I did use the word sus in a sentence the other day. So I've even gotten into the trend, but I think it'll come and go pretty quick.
I did it one time. My wife made fun of me so much that I will not say it again.
Yeah. By the way, I've got to give a shout out to Dina here. Very creative. Obviously, Dina is a halftime crew member here, comes in here almost every single day. They're doing a Christmas song, Matt. They're rhyming one in the chat. First official tackle Christmas song, she says. We'll see. Gamma got run over by a VIX deer walking home to earnings Christmas Eve. You can say there's no such thing as Vega, but as for me and Delta, we believe. Well played.
Noah has had his impact on tackle this week. We're all rhyming and Christmas. Yeah, that sounds pretty sus. I agree with that, Dan.
Oh, before we move on, dude, I just barely saw this. Just came out of the wire. We pull up Bitcoin. We got an upgrade from somebody I've never heard of. Formal upgrading Bitcoin to a buy. Price target $1 million.
Oh, so just
with 5-year target too. With a 5-year target, he believes it could hit $1 million in 5 years from its current level of 11K.
I guess that's a whole.
Agree or disagree?
I agree.
Why not?
I agree.
Why not 2 million? Right? Why not?
Yeah.
Why not? Let's play the under.
I agree.
Over under.
Yeah. I'm in.
By the way, I have three more.
I love the intraday support level on Bitcoin forming, by the way. And with that,
that's stronger than the market right there.
Man. I mean, with that intraday support level forming right here above that 11,200 mark, little breakout there, right there. Look at that intraday resistance right there above 11,300. Test. It's just playing defense. So I definitely understand the $1 million price target here because of the intraday support bounce.
Can I get a Fibonacci extension so I know if that $1 million lines up with it?
I had to go do something Bitcoin. I mean, like
let me see if I can get you a fib extension here.
How do we get to 1 million?
Here, we're gonna draw some lines.
No, and this gentleman's name is Raul Paul. He's a former fund manager at Goldman. He's currently the CEO of Global Macro Investors, and he just said there's a lot of money coming into Bitcoin, and the global $1 million price target.
Every central bank would have to embrace Bitcoin as their national currency for it to hit $1 million.
You know how you get your name out there as a financial analyst or someone? Make something up outlandish. Mark Justice says that movie theaters are going to go to $4,000 a share based on the internet imploding and people needing internet. I mean,
from here, what is that? 1,000% increase? I'm gonna have to do some math here. 11,500. Can't we just get like a 30,000 5-year price target or something like that, Matt? Why does everybody have to be radical when it comes to crypto?
It's not just crypto; it's the entire financial space, and it's not even the financial space. It's the social media influence. It's how you get likes. It's how you get your name out there. If you're a moderate and you just go through your analysis and you're actually you got to go out there with these outlandish projections. Bitcoin 500,000 or Bitcoin 1 million or, and it's just like, oh man, you guys, you don't understand how that does not help your actual case on Bitcoin. No. By coming out there and having these people put out these projections that are so outlandish that they're from the Onion. It's not like they're Onion headlines, right? It doesn't actually legitimize your product. It doesn't actually legitimize, and get it out there in the social conscious and get mass adoption that is actually needed for Bitcoin to actually become legitimate out there in society's eyes. And so, keep your narcissism and all of that, but just, take it for what it's worth. It's nothing. It's people trying to get into the headlines. It's people that are trying to get name recognition or brand recognition, good, bad, or ugly. It doesn't matter. This dude who came out with $1 million, we spent 30 seconds talking about it on our halftime report, and that's all they wanted.
Yeah. Radicals. It's crazy to me. By the way,
that intraday support level pretty strong though, right?
Oh, listen, I like the chart. Don't get me. That's not.
As a non-radical, might have been born in the wrong century.
Yeah, I think the current climate has it just does foster it. There's no question about it, which is why we've got to break down analysis
Since
one
the
step at a
entire
time and
world
try to
is
get rid of it.
radical, moderation is now the new radical.
Being reasonable and moderate
Yes.
is now just out of bounds. Well, we're going to stay there. That is where we're going to stay no matter what. A couple more price upgrades I had here, Mark, and you might have had some of the same ones. Netflix caught a price upgrade, Matt, to NFLX. Canaccord raised it to 620 from 550. We were looking at this one yesterday, and they were pushing resistance and looking interesting. I don't see the reason.
What was their price upgrade?
620 from 550.
Yeah, I could see it. I think it needs to retrace in another run, and I definitely think the breakout's legit. But we got to see it first, and you need some time to cook here first. But if you get a little bit of time to cook, you get an increasing in support from this run up. So let's paint a picture here. You get an increase, you come all the way up to the run up, you snap back, you retrace into the 520 range, right? You then form support of 520, threatening that 560 breakout. You're running from 520 against the 560 instead of 460 against the 560. Yeah, I could see a run up, and I can promise you one thing: my target would be higher than 620 on that breakout.
If it did break out.
When's Netflix earnings?
Like next week.
I know, but what day?
I think it's actually good question. I think it's the 21st, I believe. Let me look it up. They usually report on Thursday, though. It's probably a week from today, Mark. Now that you asked.
Because I've been really curious.
No, the 20th, Tuesday.
So just Tuesday, because I've been
Mhm.
really curious about that run up into earnings and not seeing it. Now, granted, there's been a lot of downward pressure, but Netflix is the type of stock that can counter trend trade depending on momentum. It'd be interesting. I'm really curious to see if you get a bump on Monday, Tuesday heading into earnings like you've seen in that pattern. So.
Yeah, and I don't have any problem with a long-term target of 620, Matt. I do sometimes scratch my head why they raise their targets like right in front of earnings, though. I mean, I've seen this a few times last quarter as well. Is there a reason to do that? Why not wait for the financial data? Maybe they're trying to call their shot. I don't know. But if it were me, I'd probably just be prudent and say, okay, I'm going to wait for that pattern to develop or the earnings to develop and give me more information. So, but I do get it. 620 is not a bad target for Netflix.
Banks have other intentions, though.
Yeah. Selling some of that
Banks
stock.
have certain things they're trying to push.
Sure. Yeah.
We'll let people take them from there.
Yep. Last one for me from an upgrade downgrade perspective, Peloton, the momentum stock that we've talked about here many times this year, as it's just been a juggernaut. They got a price upgrade to 150 from Bank of America from 116. These firms kind of playing catch up, obviously, in a stock that's just running. Matt, agree, disagree? $150 price target on Peloton.
Make up a number. That's fine.
Sure. It feels like that so often, but it's beautiful trend. Can it get to 150?
It is. Listen, I saw the breakout of 100. That was such a beautiful technical setup. Whatever it does after that is bonus column.
I agree. It's had a beautiful run. All right, Mark, I'm going to pitch it over to you, and then we'll do earnings with Matt.
A bunch of other different upgrades, downgrades. Lemonade, that stock that got David Day Trader all excited because he thought the name was cool. LMND. Credit Suisse started citing valuations concerned with an underperform with a $56 price target. LMND.
Lemonade with an underperform. I saw this one as well, Mark, and I was kind of interested just in the note on it, but it's a company I'm waiting on some data with. I don't usually play these IPOs till they give me a couple of,
well, I mean, you look at the chart. I mean, you see how volatile. I mean, IPOs are.
What's the symbol, guys? What are we talking about?
LMND. I mean, this was a very popular LMND was a very popular Robinhood stock just because its name was Lemonade, right? 56. You see anything in the chart here?
I'm seeing a little bit of a reversal there of 45 with the breakout there at, let me get the actual numbers here. You see a little bit of a double bottom there between 45 and 46. You see the retracement come into the 55.75 by, 56 level, old support acting as new resistance. The 50-day moving average, the first test of it, you just broke out of that first test. High base, a little bit of a snapback retracement, kissing off the 9 EMA. I definitely see a potential pattern setting up here for the bull side.
Mm-hmm. Next, Mark?
Next is NEO, popular EV company. Citigroup raising their target from 18 to 33. NEO, we had, NEO has had a reasonable week. We had it on the stock report, I believe, ticker symbol NIO.
We took a look at NEO as well yesterday when Tyler was here, and obviously it's just been a runner. So it did also have another price upgrade, is what you said, Mark?
Another one today, Jack can get up to $33.
Well, piling on, I guess. A couple of them in a row, a nice little breakout. Kind of missed it though, don't you think? I mean, from a chart perspective, we're overstretched. We're now on this.
But let's say you got in. Let's say you front ran that high base. What do you do with the trade at this point?
I would either roll stop up if it's a swing trade, take profit if it's a swing trade, just on the news and take the gift, or roll stop up and manage it, a little bit differently if it's a position trade. So it would depend. But if I'm playing NEO, I'm probably swing trading it myself. So I would either take profit or roll stop and protect.
Next up, cars.com, ticker symbol cars, 2 upgrades. Coming out of Wall Street on cars.com, one with an $11 price target and one with a $14 price target.
Okay.
A lot of clear air to that upside. What kind of, like when you get this gap up near resistance, what do you look for and wait? Because very few technicians buy the gap up into resistance at this point. They want to let it cook. What do you look for in this situation to play a breakout of resistance? How long are you looking? A week ahead, 2 weeks ahead for price to stabilize?
I'll just tell you what I think Frank and myself would agree on this. Cars, if you're looking at cars, you got to love what you're seeing here today on the volume. You got to love what you're seeing on the potential breakout of, you're looking at $10 obviously, but right underneath that, right about 992 is where you actually have the technical resistance area. That's literally where the high of today was. That coincides with a couple weeks over here as well. So, call it 990, call it 992, call it $10. You're looking at that level as a potential breakout. If you're looking at that level as a potential breakout, what you want to see is a little bit of consolidation. Even a little bit of a retracement back down into $9, forming a support, a floor of support right there at $9, and then eventually run up and break out break out after that, or a little bit of a high base scenario where you see consolidation between 940 and 980, 990, and then you see the breakout after that as well. Regardless of what you're looking for, you're looking at it at a breakout here. I don't think you can touch it underneath 990. Give it a couple days, even 2, 3, 4 days of consolidation. Doesn't have to be long, but give it a little bit of consolidation. Let's see if the news is really priced in appropriately, and then we can rock and roll after you see that breakout. If you see the continuation today, I know for me, and the style of trading that say a Coach Frank or myself go about, we're going to miss out on that type of momentum.
Yeah.
But if we do see that consolidation, I think that breakout of 10 is really, really, really quite nice. Targets, obviously you got an old support level at 1060. But then really you're looking at that $12 mark at that point, and that could set up as a position trade. It could set up as a swing trade, however you want to approach it. But cars, technically speaking, you're starting to look at a potential breakout scenario, and that breakout could be really good.
Yeah, no, I hope it sets up. I'll play that one if it sets up.
Well, the significant whole number first grabbed my attention instantly, Matt. That's why psychologically they mean a lot, right? I mean, $10, you look at the chart like, okay, it's right at 10. I'm going to have to wait for it to develop. I love the way you analyze that. And obviously market fits your personality with general reversal characteristics, not just in the high flyers type stuff. So I get why you have interest.
And these weren't just the 2 latest upgrades. I mean, it has a lot of street sentiment behind it right now, which you give me some technical confirmation. All right, last one I have, citing singles craving human interaction in a post-COVID-19 world. Morgan Stanley comes up and puts Match.com, ticker symbol MTCH, as one of its preferred post-COVID world plays, putting a price target of 151 associated with Match.
Didn't they do this
151,
conjointly with the Uber thing as well?
They did with Uber.
So is the basic premise, they were in a boardroom somewhere, not even a boardroom,
and they're like, what are our best once we get over COVID,
what are
are
people going to
our
want to
best
do?
post-COVID plays? And they
As long as
cited
they're-
Uber and Match.
As long as they're wearing jeans on that date, it's fine.
That was fun. If you are a regular halftime listener, that was very funny.
Thank you.
I love Match.com. Match.com's been one of the things that I've been touting for years. Like, love the space.
I got no problem with you loving
their
the
market share in online dating is enormous. They got so many intellectual properties. The chart's very choppy right now. It's a bit of a mess. 151 is very ambitious, though, to say the least. But do you see more people? What about the general premise? Because the chart's messy, it's choppy. There's no trend here. Consolidation pattern. Do you see people post-COVID flocking to the dating apps and the need for human interaction?
So post-COVID, the analysis is we're going to want to do more online stuff.
That is, listen, that's why I'm setting it. I'm giving you a softball here.
I think my jeans comment says what I think about it.
I think it's complete speculation, conjecture, and they're pulling it out of
made up stuff.
Yeah, it's hard to refute logic when there's not logic there. They're just guessing that that's going to happen, that people are going to go back and do whatever they're saying they're going to do. I get it. Maybe there's the pent up demand argument there, but when is post-COVID, by the way? Did they give us a date? Because I'd like to know if they have information about what post-COVID is and exactly when the world's going to get back to what it was. I don't know. Feels made up to me. I like Matt's, Levi's comment, so I'm with that. Matt, you got a couple earnings I believe we want to talk about. Is that right?
Yeah, I'll just rapid fire earnings really quick just to get them out there. Morgan Stanley, we talked about them just a second ago. Morgan Stanley comes out, reports $1.56 against $1.26, a nice little beat on EPS. Also a good healthy beat on revenue here at 12.2 billion versus the 10.1 expectation. Revenue did decline 7.1% year over year. Kind of with some of the other bank stocks, nothing to see here for at least for me with Morgan Stanley. Do you guys have any other additional commentary on it?
Neutral. No, we've been seeing this with banks. The best bank this week was Goldman, and then everybody else so far.
It's Goldman and everybody else for me.
Yeah.
BlackRock and Goldman.
Obviously BlackRock. Yeah.
I mean, the only thing I have to add, the more investment type banks this week, because I haven't been here for bank earnings. Investment type banks, man, they just know how to make money. They don't care.
They do.
Apocalypse, zombies come, they'll find a way to trade that. Goldman, the Morgan Stanleys of the world, reasonable, safe cash flow type plays, boring charts, but they know how to make money.
Walgreens here reported next, and Walgreens reports $1.02 EPS versus 96 cents. Revenue came in line at 34.7 billion versus 34.4 expectation. Guidance was basically neutral a little bit, but they did lower just a tiny bit. Revenue did decline 2.3% year over year. Nothing really to see here on their earnings numbers. Just from a technical perspective, Walgreens is forming a little bit of consolidation over the last month or so after Walgreens has been absolutely slaughtered, not just year to date, not just post-pandemic, but when you look at Walgreens has been beaten up for quite some time now. Does Walgreens represent for somebody like you, Mark, a traditional bottom feeder, deep value type candidate? Their earnings numbers weren't great, but they weren't bad, really kind of neutral on it. Do you see anything here from a deep value perspective on Walgreens?
I do actually. I've been eyeing Walgreens, trying to figure out what to do. Waiting for maybe a technical signal over the 50 here, right? Because I'm not going to buy ahead because you got really clear resistance zone and the 50. So, I mean, this is the thing. Even as like a long-term investor, you still don't spit in the face of technical analysis, and you're wait for a move above resistance a little bit because you don't have to pay a whole lot. On a deeper pullback, Walgreens is a funny company because they make money, right? They make money. Their PE ratio is reasonable. What's their dividend yield? I haven't looked at that in a few weeks. Hold on one second. Let me get that. It's just, it's not a sexy stock, but man, in the deep value, I like this 1,000,000 times more than oil, right? Forward year on the dividend rate is about 5%. So your dividend's, reasonable. So yeah, it's just a matter of like it's represents deeper value. It does, but man, I mean, pull up the weekly chart. Investors hate this stock.
It's ugly. Yeah,
Like
completely bad.
they just hate the stock, and so I wouldn't mind seeing even a few more weeks of bottoming. I'd like that low to be tested again. I don't feel like I'm going to miss out if rushing into it today. I don't think Walgreens is just going to explode to $45 anytime soon. So I think there's something here, but I'm going to be a little patient, wait for it to bottom out, a real long bottom.
Mm-hmm. I have zero interest. So.
Well, yeah, of course.
It's not
there is a reason I asked the traditional bottom.
Oh wow, a value company at
Shocker.
the bottom. Is Tim interested?
Is Tim, no.
Why don't you ask if Tim's interested in Xerox next?
Yeah,
well, we go to UAL.
That'd be like Tim be like, hey Matt, can you break down Hertz, please?
Hertz is banned. We're not.
The answer is no. I cannot break down Hertz. Next, we got terrible company, United Airlines, reporting earnings of a negative $8.16 versus the expectation of a negative. Man, the airlines earnings are just so bad. Quarter after quarter, they're just terrible. They had an expectation of a negative $7.63. United, you did better than you were expected to lose. You lost $8.16. So golf clap for you guys running that terrible company. Revenue did decrease by 78.1% year over year. Revenue came $2.5 billion versus the expectation of $2.7 billion. I honestly don't know why anybody would touch this company.
Yeah, I have no interest at all down here. I mean, Marky,
I
even
have
in the airline,
I have a little bit of interest in Southwest and Delta.
I was just gonna say
but
those two kind of stand out, Matt. But everybody else in the airline industry is like, what are we doing here? I wouldn't touch UAL for any reason. Mark, anything down here?
No, I ain't doing it. I'm not selling another naked put till I see that they make sure that they get free money from the government again.
Yeah.
Like, and maybe I'd revisit at $12 or something. I can't get any premium there right now. But like, listen, the only way airlines outside, especially UAL, survives is
if we bail out United Airlines and American Airlines with our taxation, I'm taking the day off the halftime report.
So that's the only way. I really do believe. I don't even think it's a question. Southwest, Delta, they're in a much better financial situation. I don't know how United and American survive without free money.
The question, the answer is they don't. They don't.
Yeah.
And that also means you shouldn't bail them out.
So no, I mean, so if they get $100 billion gazillion free again, then I'll start my rotated naked put thing again. But until then.
Kimberly Clark is the next stock here. Reports earnings of $2.20 a share versus expectation of $1.82. Revenue did come in at 4.6 versus the 4.6 on their expectation as well. You also had revenue decline just 0.4% year over year and a slight downgrade in guidance after they brought their guidance back, but that downgrade in guidance wasn't really anything. They just brought back their guidance for the most part. Do you guys have any interest in Kimberly Clark here? Household, personal products? I don't.
Not my kind of stock.
I'm not a huge consumer staples kind of guy. Like every once in a while, there'll be a bottom fishing opportunity. I never.
Yeah, but when you play staples, you play the names in staples.
Yeah, the Coca-Colas and
it's just
the
not my
Walmarts, the Coca-Colas, the Pepsis. I mean, that's who you play in staples.
Yeah.
I mean, I actually know Kimberly Clark well. They have a really diverse brand of merchandise. It's just you can't follow them all, right? Yeah. I mean, how am I going to kick SeaWorld off of my 100 list to put Kimberly
how
Clark
in the world would you ever do that?
I almost kicked it off yesterday.
I'm starting to think Mark has like 348 companies on his top 100.
I got 100. Like it almost got kicked off yesterday.
Mm-hmm. You should kick him off.
Last one. By the way, he got the over on that bet.
Yeah. Well, that was only because you laid that out. I mean, I'm just being stubborn on it now.
He's going to kick it off.
Yeah. All right, last one.
Yeah. Taiwan Semiconductor came in at, let's go to TSM here. Taiwan Semiconductor came in at 90 cents a share versus the expectation of 92. Revenue came in 12.1 versus 12.5. Revenue increased 29.2% year over year. Really nothing to see here on Taiwan Semiconductor, to be honest. I personally like the bull flag pattern that is forming on Taiwan Semiconductor. And as long as that 9 EMA holds, look at this nice little trend line developing on the downside here during this nice little snapback retracement, otherwise known as a flag pattern. Look at that nice little 30-minute chart there. You break out above that, you should have some clear air to the top side on Taiwan. I kind of like it technically here.
You know, I traded this recently on that breakout just as a swing trade, took profit just right before. And now the flag pattern, as you're identifying, this is one stock I just am firmly been watching for a long time. And
I
love
am a believer in Taiwan Semiconductor.
I do. I love the fundamentals. I like the company. I like what they're doing, obviously. And the chart is developing in a very, very healthy way. So yeah, I love the call there, Matt, on the bull flag. Now it's not confirmed yet, and you're the first day on earnings. You got to get those things.
Well, that's fine. But I mean, how many stocks have we seen that have went up, 100% post-pandemic and then be completely overextended? Right now, despite the fact Taiwan's up literally 100% post-pandemic, P ratio is still reasonable at 29.
Sure is. Yeah.
And I want to punch myself in the face for saying reasonable at 29.
It's the new world we live in, bro.
It's the world we're living in right now.
Hey, this time it's different.
Listen, all I know is a 28, 29 P ratio is substantially underneath the market average.
Hey, listen, Taiwan's a great company. It's one of those companies that it's just what price do you want to pay, right? I mean, because it's a great company. So
you're going to pay the price you pay on confirmation above that 30-minute chart.
That's right. You will pay confirmation price. I love the flag developing here. I like even the price response since the cash open. I know it was the earnings here. I'm interested, Matt.
Have you ever met anybody in your life that hates bullish uptrends more than Mark?
He hates them.
Oh, absolutely hates them.
It makes him angry, I think.
It's like this is an increasing momentum.
I want to sell a 65 naked put on Taiwan, but I can only get $20 for it.
Well,
and it's not enough.
That's how price versus strike works, bro.
So like, it's like, come down. Oh, I am. Nobody hates uptrends more than I do.
Nobody does.
Unless I'm over leveraged and I need it to be cleared out, then I love them. So.
There you go. All right, back on the S&P while we get final thoughts here, Matt. By the way, that intraday call that you had earlier in the show, obviously it's been playing itself out a little bit here. We did get a little quick breakout on that 34.60 on the intraday. Nice little price development through the intraday here, back up to 34.70.
Yeah, it's almost like technical analysis works.
TA does work. Let's get final thoughts here. Let's go with you first, Mark.
What are my final thoughts? 19 days till the election. I heard Jim Cramer yesterday saying, expect a huge sell-off before the election. And then that'll be the opportunity to buy. He doesn't have a clue. I hear people saying it's going to rally before the election because of XYZ, right? Listen, ignore the election noise because you got people out there saying all kinds of stuff. If you flip 50 different channels, you're going to find 50 different opinions on how it affects the market. Trust whatever system you have. There's going to be news. There's going to be back and forth. If you're a swing trader, hey, Matt Gibbs has been really good on technical analysis over the last 3 weeks. Trust your own technical analysis, but just because Jim Cramer calls for the sky to fall, or just because somebody says it's going to be bullish listen, you're going to find a million opinions. Nobody knows how the election is going to influence the market. So, trust your systems, trust your technicals, ignore the election noise is my final thought.
Matt?
It saddens me when economic data points are no longer viable from a market functionality perspective. But this is also not the first time where we've seen data get manipulated to the point where the market no longer cares about it. And when you start to see market dynamics change, you can't rely on what you think worked in the past. You got to update your systems to what works in the future. And, 2 months ago, Tim, I said initial claims data, and the reason I'm bringing it up is because we're talking about it in chat. But the reason I said 2 months ago that initial claim data didn't matter, I said that on the literal day that they changed the calculation for the data. Literally that day when they removed seasonality, when they removed furloughed individuals from initial claims to make the number look a little better than the number actually was. I literally said it that day on the halftime report. This data is not going to matter to the market in the future. And Tim, how many times have you asked me to analyze initial claims in the last 2 months? And what have I said? It doesn't matter. It doesn't matter. And now finally people are looking at it and saying, yeah, it's shocking that a number of 880,000, 900,000 on initial claims doesn't matter. It's not that the market isn't looking at that data and saying that doesn't matter. Like people in the market care. It's not that Wall Street doesn't care if anybody's not employed. That's not it. It's that the data is manipulated, and so we can't trust the data to give a proper economic projection on where we're going to be in the future. And so it's not that the market doesn't care about economics. It's not that the market doesn't care about initial claims. It's that the initial claims report has been manipulated, and they didn't offset that manipulation and update the previous, which means now you don't have a base case to say if we're improving or if we're not. And so that's the problem with the initial claims, is we don't understand what the base case is for improvement versus contraction. Right now, when you're looking at initial claims and you see that headline today of 898,000 initial claims, and the market is actually recovering after that news was announced, new people and traders alike are going to be looking at like, how does that not matter? How does that not matter? It does matter. We're trying to understand economically where we're going to be at in 6 months from now, 12 months from now, 2 years from now, 3 years from now. And it's very difficult to use data that was obviously manipulated to a certain extent for political purposes in your economic projections. So it's not that it doesn't matter. What I believe is this: if the data was not manipulated, you've actually seen a little bit of improvement in the labor market in the last 2 months. But because the data was manipulated, we don't understand for certainty what that base case is on improvement versus contraction. And so the data simply doesn't have a big market impact because it doesn't really help with furthering the economic projections at central banks, at hedge funds, at the institutions. And quite frankly, when I'm just sitting down in my chair analyzing the market, it doesn't help me kind of understand where the economy is going to be in 6, 12 months from now based on the manipulated data. The overall number is a headline number, but it has very little market impact given the fact that it doesn't have anything to do with the base case of where the economy is going to be in 6 months to 12 months from now.
Yeah, and pretty much every week, whenever they have the data, I bring it up. I'm like, okay, Matt, analyze this, and you've been consistent on that for quite some time, and I think that's exactly where the market is. So I appreciate you, kind of breaking that down for our team out there, because you've had a really good read on that. My last thought is very simple here, guys. As the markets are moving forward, focus on the data in front of you. Leave, conjecture and opinion and big, crazy, wild projections and all that kind of stuff about what may or may not happen. That speculation doesn't necessarily help a lot of times, especially for new traders. And so focus on the chart, focus on the data, and there's a reason why we go through top-down analysis one step at a time. It's to try to remove any bias, opinion, and conjecture and try to just focus on what's happening. Interesting market development right now, breakout, developing into a retracement. We got 3 red candles. And guys, I think every trader would be interested in potential tomorrow if Matt, you got confirmation on that candle. So there will be setups developing. We'll see if these support levels can hold and whatnot. And I think that 3,400 level ultimately may be in play, but focus on the chart, focus on the price action, and stay data driven. All right, that's it here for today, guys. Like it, subscribe, click the bell if you've not done so yet. We always appreciate that. If you're brand new to our channel, welcome, welcome, welcome. We do this each and every day at 12:30 Eastern whenever the markets are live. Tomorrow, we've got Coach Frank and his charts. If you ever want to get really, really good chart information, follow at Tackle Trading on Twitter. He does a great job over there on our Twitter account. We will look forward to that. Outside of that, guys, we're done here today. We'll see everybody tomorrow, same time.